In this lesson, we will go over the Georgia Residential Mortgage Fraud Act, GRMFA. To understand the Act, you must first have a firm understanding of some important terms used throughout. These key terms include the following: the mortgage lending process, which means the process through which a person seeks or obtains a residential mortgage loan, including, but not limited to, solicitation, application, origination, or negotiation of terms, as well as third-party provider services, underwriting, signing and closing, and funding of the loan. It also includes the execution of deeds under power of sale that are required to be recorded pursuant to Code Section 44-14-160, and the execution of assignments that are required to be recorded pursuant to subsection B of Code Section 44-14-162. Documents involved in the mortgage lending process include, but shall not be limited to, uniform residential loan applications or other loan applications, appraisal reports, HUD-1 settlement statements, supporting personal documentation for loan applications such as W-2 forms, verifications of income and employment, bank statements, tax returns, payroll stubs, required disclosures. Pattern of residential mortgage fraud means one or more misstatements, misrepresentations, or omissions made during the mortgage lending process that involve two or more residential properties, which have the same or similar intents, results, accomplices, victims, or methods of commission, or otherwise are interrelated by distinguishing characteristics. A person means a natural person, corporation, company, limited liability company, partnership, trustee, association, or any other entity. A residential mortgage loan means a loan or agreement to extend credit made to a person, which loan is secured by a deed to secured debt, security deed, mortgage, security interest, deed of trust, or other document representing a security interest or lien upon any interest in 1 to 4 family residential property located in Georgia, including the renewal or refinancing of any such loan. These are the key terms you need to know for the Act. Now, let's discuss the most important sections of the Act, starting with Section 16-8-102, which specifically covers residential mortgage fraud. Residential mortgage fraud occurs when a person does any of the following with the intent to defraud. 1. Knowingly makes any deliberate misstatement, misrepresentation, or omission during the mortgage lending process with the intention that it be relied on by a mortgage lender, borrower, or any other party to the mortgage lending process. 2. Knowingly uses or facilitates the use of any deliberate misstatement, misrepresentation, or omission, knowing the same to contain a misstatement, misrepresentation, or omission during the mortgage lending process with the intention that it be relied on by the mortgage lender, borrower, or any other party to the mortgage lending process. 3. Receives any proceeds or any other funds in connection with a residential mortgage closing that such person knew resulted from a violation of the Act. 4. Conspires to violate any of the provisions of the Act. And 5. Files or causes to be filed with the official registrar of deeds of any county of this state any document such person knows to contain a deliberate misstatement, misrepresentation, or omission. An offense of residential mortgage fraud shall not be predicated solely upon information lawfully disclosed under federal disclosure laws, regulations, and interpretations related to the mortgage lending process, nor upon truthful information contained in documents filed with the official registrar of deeds of any county of this state for the stated purpose of correcting scrivener's errors, mistakes, inadvertent misstatements, or omissions contained in previously filed documents. Next, let's discuss Section 16-8-103. For the purpose of venue under this article, any violation of this article shall be considered to have been committed in the county in which the residential property for which a mortgage loan is being sought is located, in any county in which any act was performed in furtherance of the violation, in any county in which any person alleged to have violated this article had control or possession of any proceeds of the violation. If a closing occurred in any county in which the closing occurred, or in any county in which a document containing a deliberate misstatement, misrepresentation, or omission is filed with the official registrar of deeds. Finally, we'll briefly discuss the penalties under the Act, which are covered under Section 16-8-105. Violation of the Georgia Residential Mortgage Fraud Act is a felony. If convicted, a defendant will be imprisoned for no less than 1 year and no more than 10 years, and or ordered to pay a fine which will not exceed $5,000. If the violation involves engaging or participating in a pattern of residential mortgage fraud, or a conspiracy or endeavor to engage or participate in a pattern of residential mortgage fraud, a defendant will be imprisoned for no less than 3 years and no more than 20 years, and or ordered to pay a fine which will not exceed $100,000. Each residential property transaction that results in a violation of this article shall be considered a separate offense.